this video, we're going to have a look at how to assess capacity for a self-employed entity like a company. Start with the serviceability calculator, and in this example, we're going to use the Macquarie one. Look for the click here for self-employed worksheet. Most calculators should have this. If you're not sure, just ask your BDM if you need to. Follow through the fields that require input. Tax year ending for the current year is the field we will start with. The current tax return is 2016, so we will input that into the calculator. This is based on the tax return that we're going to be using in this example. Ideally, you have the previous year too, which will be a replication with some figures that are different. The next field, profit and loss before tax, we need to go back to the return and scroll through to find the total profit or loss on the tax return. The figure is $45,404 in this example, and what we'll do is we'll carry that back into the serviceability calculator. The next field is minus non-recurring income. Generally speaking, this isn't in all tax returns. It's a one-off payment you won't receive again, like a government grant. In this case, we'll leave it blank. Let's go through to the director's salary and fees. Scroll through and have a look through the first couple of pages. If you don't see it on the return, you may need to go back and consult the individual tax return. What we'll do in this example, however, is use a figure of $70,000. Depreciation is the next field requiring input. If we return to the tax return, on the page you can see there, it's $41,681. Enter that into the depreciation field in the serviceability calculator. Interest expenses, loans being refinanced is the next field. In a lot of cases, we aren't refinancing business loans, but if we were, they would be here. Superannuation is the next field, and generally you would only be entering information in this particular field if you're paying over and above the minimum required by the employer as legislated by the government. So in this example, we're going to leave it blank. Non-recurring expenses is the next field, and you normally wouldn't see this unless it was the first year of trading. This would usually be a shop fit out, for instance, something that is an expense as a one-off and not recurring. The other field may refer to a large or unusual expense, and you would need to ask your customer about what this may relate to. So let's replicate some of the numbers in 2015. Most lenders will average out 2 years of income. As you can see, the income for serviceability is $124,485. It's important you also need to fill out the income allocation to applicants. In this example, it's 100% for one applicant. If it was more, like a husband and wife, you'd do 50-50, or if it was partners. And then what you can do is click on Back to Serviceability Calculator, where you'll go on and fill in the loan amount and the years, etc. And that's how we assess self-employed entities. In this example was a company.